Be here and showing you guys the post from Monday and the state of the market ritual type of uh, place setting for the rest of the week. We're going to continue to do these. They've been very popular in the past, but the point is that we always have to take inventory of where we are, where the market is, and have a hypothesis. Even if it's wrong, we have to have a hypothesis so that we can either fade it, or pound it in the future. So, welcome. And here we go. So, the first thing that I put on here is the market map. This is going to be obviously the indices at the top and the movers at the bottom. We have trending as well as like home stocks, which are the ones that I always take a look at. And it's nice to have them at a simple glance. But the reason I show you this is that looking at the sector volume, you would think immediately, I would think for sure that it would be a down day for all the stocks, right? If 71% of stocks are trading off, then how is it possible that we would be able to have this much green in the indices? And we kind of know what's happening there with the NASDAQ. That's the majorly heavy weighted um, index that has everything involving the tech companies as well as like the big heavy hitters when it comes to defense and a lot of mid caps and small caps that are in disruptive technologies. So that's not too scary or too much of a thing for us. But I will say that what this tells me, and I hope you learn as a lesson, is that when you see a big sector sell off like this, and it has been happening for several days, by the way, this isn't just the first time I'm showing. When you see this happening, it almost always means or is a tip off for insider trading or the big, very close to insiders, but particularly in the government as well as the large institutions. I wanted to show that to you guys because it absolutely makes sense when you think about it that way. Is what's going on here? And we're having big flows into tech, but we're not having any flows anywhere else. And again, that's usually indicative of maybe a little bit of collusion on the inside going on, which I would hate to ever insinuate that that's happening, right? So we know that we're having a sketchy-ish market. It's essentially super high volatility on both sides. That's the state of the market as pertaining to that piece. Housekeeping. I don't have any housekeeping for all the subs today. So it's all good here. The hypothesis, we have to prove a hypothesis, right? So I have the same hypothesis I've had for the last month or so, which is up is down, right is left, good is bad, bad is good. Um, Meaning that this market is trading contrarian right now. So contrarian is a word you're going to hear a lot if you haven't, become an intermediate to expert level trader yet. We're on your way. Um, but contrarian is exactly as I said, and is exactly as schizophrenic as all the geopolitics and all the tariffs and all the things that we've known are going on and we're watching. And it's just still seems that the market's going up and up and up. And there's some euphoria and enthusiasm in there that is very rare, and stocks are going up even when we bomb countries or even when we announce policies. And um, it's kind of like showing the haters wrong, right? Um, but in truth, that's why we're still going aggressive to most aggressive on the stock trades that we're making using our 3 times leveraged ETFs. And it's worked. It's been great for us. So that, including the fact that we put out trailing stop loss limits at the risk level that you are comfortable with, we're on track. This is the right strategy and the right time. One thing for the paid subs, uh, pertaining rather to the trades that we've had over the last couple of weeks going, it doesn't matter so much because today it's up 18%. But the point that I wanted to put in here is that out of the five stocks that we own, this was the one that I decided that is best to put a trailing stop loss on. Obviously, do that at your own risk. If you want to tighten it, you absolutely can. This thing was down 31% at the lowest on my screen. And what we would do and what we will do now it's obviously not going that direction, so a 10% stop loss should be appropriate. But now if it were to go the other direction, here's what I would want is I'd want that stop loss to execute and we'd be getting out, right? And it's like that hurts. You're taking a 41% loss. Like that's effing crazy, right? Um, a lot of the times with these smaller caps and very volatile companies, particularly volatile to the upside, what I have you then do, and what I personally do, as a kind of another lesson here, is that we would just put an alert for the next time that that gets either the same price that it was at when we sold, or maybe even lower. And by doing that, we're basically taking the negative and turning it into a better opportunity. And we will catch back up to our profit level, or at least our break even level, more quickly. I think everybody gets that. This is the inventory of US Treasuries right now. The way I want you to think about that is that 30-year Treasuries, 20-year Treasuries, and 10-year Treasuries are at the end of the yield curve. So if there's a curve going like that, we'd have the short-term CDs over here, and we go all the way out to the 30-year notes. The point that is evident in this is that the difference between a 10-year treasury and a 30-year treasury as a percentage of return is zero point 0.5, so one half of a percent. And even looking down even further, a 1 month treasury is 3.6%. So there's not a lot of stratification of rates as you'd imagine they should be. Time I take, return that I'm expected or given, guaranteed, really. So when that's only happening in a like a very slow, basically, this is a flattened yield curve. If you think back to economics, I'm sure you heard that. So a flattened yield curve basically means that the banks are like, hell, I don't know. I don't know if rates are going to go up or go down. I don't know if the stock market is going to crash, and then everybody will be bringing their money to us as the safe alternative. It means that there's a lot of uncertainty. And this is always a thing that we check. Be sure to always be watching what the bonds are paying, particularly the treasury notes, because that's also something called the risk-free rate. That's how you compare investments. For an example, if I had an ExxonMobil stock and it was paying me 4.5%, right now, that's the same equivalent of holding a 10-year US Treasury to make a little bit less, and that stock is over 10 years is very, 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 very likely, almost guaranteed to go up, right? So this is a symbol of the fact that the banks are just sitting around and saying, "I don't wanna play, I'm not sure what's going on, and we'll let our homeboys over there in the stock market, um, take the risk." So this is what's called a risk on environment, or risk off environment rather, and that's coming from the banks. As far as crypto, I'm glad I included this graph in here for, oh, that's the 1 day. I have the graph. Yeah, there we go. Better graph at the bottom. But as far as crypto, y'all know that I only really take stock of Bitcoin. I check out Ethereum and even XRP, Solana, some of the others, but as a matter of actual, like, just fact is I don't really trust any of the other ones. Not that they're not legitimate. It's just I don't understand the framework of how they work. And Bitcoin has been an investment that we've profited a dozen times or more over by selling and rebuying. And currently, right now, it's low. When we look at the 6 month on Bitcoin, pretty amazing. It's down 26.36%. So this is getting on the radar to buy, for all you traders, and to trade with leverage. Um, and there's several stocks that we can buy here that are actually 3 times levered and they're proxies for Bitcoin. So it really turns out to be more like 5x or 6x, meaning that if the price of Bitcoin goes up 10%, we'd be looking at 60% on the upside. That's the value of some of the more intense and volatile investing that I do here. It's also protected on the downside because it next time we buy something like this, we'll absolutely put that stop limit in. So if you're not a subscriber, this is how we do it. I'm showing you. Become a paid subscriber at Substack, everbullish.substack.com. And we'll be getting all kinds of videos just like this rather than only the text versions. I send out everything to the paid bulls immediately. They deserve it. And everything I do is actionable and you will learn. That's the main point is I want you guys to learn how to be as good as me or how to be as good as a pro trader, and you give yourself a lot more freedom and openness in life in general. All right, commercial over. Sector ranking. As always, the linchpin at Ever Bullish and my trades is that I go to sector histograms and charts and pay more attention to sector than I even do the broad market. This is where I start, guys. I suggest it is for you too, because let's check it out. And I'm going to be likely telling the future here. So performance over 3 months, IT as always. So this is the big tech companies. This includes NVIDIA, Apple, Micron, all the way down to some of the smaller companies, Salesforce, those types. Typically, so this is typically going to be a bullish trend. So if IT is high, usually healthcare, finance, and energy are going to be low because those are kind of the opposite. Those are contrarian. Those are the ones that people flee to for more safety. They also typically carry a dividend, and they also have thousands and thousands of very competent analysts that can kind of tell you straight up what's going to happen in this healthcare sector going forward. So what I mean by contrarian is it's crazy that we have information technology at the top, and I would, in any other market, yeah, there we go. Any other market, I'd expect it to be at the very bottom. So we're trying to figure out the trend. So 3 months ago, IT was the main big winner, and then look, yeah, check it out. So healthcare, and majorly energy. What happened a month ago that may have impacted energy? Uh, what kind of trade did we make, bulls? To make sure that we took advantage of that, we bought UOILU, an ETF that does several times the movement in the oil price, and the companies involved daily, right? So I'm proud of that one. I'm bragging, but that's some of the more simple trades I've ever done in my entire life. And I'm glad I had the bulls follow on that one. Look what's happening here. So we're at 1 month now, and this is negative 4.5%. So what happened? We capitulated, right? The main star of the show is now down in the dumps. And if this were to continue, I can tell you just by looking at this one chart that if this were to continue and you're trading a lot, you'd really want to make sure that you're not in any IT for a while. Or you could potentially have, maybe an alert to buy at a certain price. But this usually means that the market as well as the economy are on the down slope. But sometimes it means that they're even crashing or in recession. So interesting that 1 month ago, that's what was going on after taking into account the previous 3 months. This is what I mean by establishing a trend using sectors. Looking up at the top again, so energy killed it again, and it was obviously a bad week because look at how red and negative everything on this histogram is, right? So there we go again. So we've had, the good market at the bottom, the bad market right here. We've had the bad market at the 1 week as well. And then I always include, just for the 1 days, is that I'm looking at this on a 1 day perspective for those trades that day based on the week before and the month before and the trend that I just explained there. So what it really means to me is that we need to be paying direct attention very closely and not overweight ourselves in those tech trades that sometimes we make 20 or 30%. Now we're going to get out of those trades rather than trying to let them ride longer. Corporate earnings came out this week too. That's another reason for um, the scattered layout of indices, as well as just some great stocks are down when you wouldn't expect them because the indices are up and vice versa. So today we had Bank of America, Goldman Sachs, Lockheed. Tomorrow we've got ASML, the chip manufacturer, maybe the most niche chip manufacturer in the world. Johnson and Johnson, Morgan Stanley. The big one is Google or Alphabet, Tesla, United Healthcare, and Taiwan Semiconductor. So this is like the heavy hitters. This is like the home run contest that just happened. If you watch that, what happens in these earnings calls is typically going to be, and I trust to be, enacted throughout the market going forward. I mean, if a lot of these guys ended up missing earnings and missing revenues, time to go short the market, which we absolutely do very easily here at Ever Bullish. So that's kind of the takeaway. If you're not getting the main point here, is that sector trends are looking as though we're going to be turning down. We had a great day today and will likely have one tomorrow in tech. Um, that capitulation is what we're waiting for, back to information tech being at the top. And it really does happen quick. So, not to speak out of both sides of my mouth, I'm just super proud and happy that we're in the triple energy space with that trade in OILU. I didn't include on here. I actually, if you want to visit, I have all the stocks that will be reporting, or all the notables, and want to make a big shout out to all the paid followers. I look forward to giving you guys the direct trades that resulted from this hypothesis and layout, and that are going to be making us big money like we have been. One more thing to the paid subscribers, other than OKLL, which kind of discussed, now it's already happened, but I do suggest going ahead and putting maybe a 10% stop loss limit order on that. So limit order by percent, 10, and the trailing stop loss. So appreciate you guys showing up. I'm a little rusty, but this is an exciting thing for me to be able to start making videos again, as well as the rest of the content. And I want to show the world what we're doing. I got to scream it from the mountaintops. I am the Sherpa. And really and truly, I appreciate y'all. I'd love for you guys to check out. I do have a freemium option, meaning that some of my content is free and I can earn your business that way for you guys watching on YouTube, as well as the fact that you get 2 weeks free when you sign up either way. The next thing that'll be coming is the trades that result from this, and probably a couple more lessons as well. Appreciate all you do. Thank you guys.